So we are going to talk about audit engagements. So this is an international auditing standard known as ISA 210. So necessarily under this engagement, we're going to look at what are some of the factors an auditor considers before accepting and after accepting an engagement. So the first thing that you need to identify in this case so last time we looked at what are some of the audit cycles that we have. The first one was the audit engagement. For instance, so for this one, we're saying the first thing that you have to do is that you establish that the preconditions of an audit exist. Establish the preconditions of an audit exist. Preconditions of an audit exist. And these preconditions of an audit are what you're saying. These are what the auditor needs to know before he takes up an engagement. And the reason why he needs to know these conditions or to ensure that they exist is that it threatens what we call the independence of an auditor. So when you're talking about this, the first one, so under establishing whether the preconditions of an audit exist. So the first condition that you're saying is that he establishes whether the or determines the financial reporting framework that has been used. Financial reporting framework. The financial reporting framework applied is acceptable. Applied is acceptable. So what that means is that, for instance, when an auditor undertakes the audit of financial statements, one thing that he has to confirm is that these financial statements have been prepared in accordance with the identified financial reporting framework. And what does this stand for? What does IFRS stand for? Financial reporting standards. So we're saying that the financial statements have been prepared in accordance with these standards. That is one of the preconditions of an audit. Also, to obtain an agreement, so also obtain an agreement from the management, that it acknowledges that it is their duty to prepare the financial statement. From the management, that it acknowledges it's their duty. It's their duty to prepare the financial statements, to prepare the financial statement. So when you're trying to answer this question in a case that you're asked in an exam, so up to this point, the first thing you understand is that the financial reporting framework applied should be acceptable. And then the rest of these preconditions involve the auditor obtaining agreements from the management. So the first one is obtaining an agreement from the management that it acknowledges it's their duty to prepare the financial statements, after which now the auditor also obtains another agreement to ensure that the management knows it's their responsibility to formulate and implement internal control systems. And we said internal control systems help to reduce what kind of risk? We said audit risk can be classified in three ways. One, it can either be inherent risk, also detection and control risk. So if they come up with these internal control systems that are strong, then the control risk will be low. So also obtain an agreement from the management. Obtain an agreement from the management. It is their duty to formulate and implement internal control systems. And then also Another one is that they obtain an agreement from the management that it is their duty to provide all access to information. Obtain an agreement from management that it is their duty to provide unrestricted access to all information. Unrestricted access to all information in the organization. So this now brings us back to the concept of what are some of the legal rights of an auditor. One is to have access to information in the organization. Another one, what are some of the other rights of an auditor? What is another right of an auditor? Also to have unrestricted access to the company's premises, among others. So that is what you're saying. So these are the preconditions of an audit. And then also obtain an agreement. I've told you the easier way of understanding this is knowing that for the rest of these points, they result in the auditor obtaining agreements from the management, whether they receive the information or they receive unrestricted access to persons. Obtain an agreement from the management, that they will provide unrestricted access, provide unrestricted access to persons in the organization. So the reason why this is very key is because the auditor has to formulate an opinion on the financial statements, in the audit of financial statements. So by engaging these persons in the organization, he will be able to get the explanation as to the balances that are resulting from the financial statements. So this is what you're saying. So these are some of the preconditions of an audit. And then also, so that is the first thing that an auditor has to make sure that exists before he can take up an engagement. And then the second one is that he has to obtain an agreement that the auditor and the management know their responsibility with regards to the financial statements. So that is another aspect that you have to look at. So we're saying that they have to confirm that there is an understanding. On the roles or the responsibilities between the two. There is an understanding of the auditor and the management. Of the auditor and the management on the terms of the engagement. So these terms of engagement mean what are some of the audit fees that we will charge, or what are some of the concepts that we will consider in conducting this audit. So that is what you're saying. So the terms of the audit engagement are defined in what we call the engagement letter, which you're going to look at. Now, the first thing that I want you to understand is that these are the preconditions of an audit. So these are what must be met before an auditor can actually undertake an audit engagement. So one is to establish the financial reporting framework applied is acceptable, after which he obtains agreements in this order. So the first one is that the duty of the preparation of the financial statements lies with the management. Also, to implement internal control systems that help the financial statements not to be misstated, after which they are to provide unrestricted access to the information on the organization, and also to obtain an agreement that the management will provide unrestricted access to persons in the organization. And then the second thing is that to confirm that there is an understanding of the auditors and the management between, also to confirm there's an understanding between the auditors and the management on the terms of the engagement. So these audit terms on the engagement include, so the agreement that you're saying, agreement on audit engagements, include, so this, for this one, we usually consider two kinds of factors. So the factors before accepting an engagement and factors after accepting an engagement, or procedures to perform after appointment. So, so the first one, so we are saying the agreement on audit engagements are usually divided into two. So first one is the factors to consider before accepting an engagement, or procedures to perform before accepting an engagement. So these are some of the items that the auditor has to consider. So the first one, necessarily, we are saying, is to ensure that the auditor is not disqualified, to ensure the auditor is not disqualified on legal ground, is not disqualified. And on what basis can the auditor be disqualified? What are some of the reasons why that may make an auditor not be chosen to be the company auditor? One is if that individual is a servant or an officer of the company. Also, if that individual is bankrupt, is considered to be a bankrupt individual. So that is what you're saying. Ensure that the auditor is not disqualified on any legal grounds. So these are the basis for which we disqualify someone from becoming a company auditor. And then also consider, so this is consider whether the audit firm has the relevant resources, whether the audit firm has sufficient resources. So these sufficient resources that you're saying, this is in terms of manpower and also the financial resources. Does the audit firm have sufficient resources to undertake this engagement that you're saying here? Also, consider whether the audit firm has the necessary staff. Consider whether the audit firm has the necessary staff. The necessary staff to undertake the audit. So this is very important because what it does is that it helps in what we call audit planning. You can actually split the functions that are to be done during auditing, or the kind of work, the scope to be covered in the audit, through making sure that you have the necessary staff. Also, what it does is that it helps you to meet the deadlines. Because if you have short staff or you're short staffed, it means that the deadlines may pass the auditors in conducting audit of the client. And then also ensure there is no conflict of interest. Ensure there is no conflict of interest. Ensure there is no conflict of interest. So conflict of interest, in other words, means where the auditor's personal interest may diminish or compromise the objectives of the audit, in which you said the objectives of the audits can be classified into two, either the primary objectives and the secondary objectives. And the primary objectives are what we said is that the auditor should express an opinion over the financial statement. So conflict of interest is whereby an auditor may pursue his personal interest at the expense of the audit. So if he sees that there's a conflict of interest, he cannot accept this engagement. That is why he has to carry out this or consider these factors before accepting engagement. And then also consider the level of risk involved. Consider the level of risk. The level of risk involved in the audit. Involved in the audit. So if the level of risk is involved in the audit is very high, what happens is that the auditor may not accept the engagement. And this level of risk is what we call the audit risk that you're saying. It can either be inherent risk, detection and control risk also. And then under auditor's legal framework and professional framework, we said what is the conditions for speaking to a predecessor auditor. One is, first of all, you must seek permission from the client to speak to the predecessor auditor. If the permission is denied, what do? You reject the appointment. Also, the predecessor auditor is to seek permission from the client to divulge information concerning the client to the incumbent or the successor auditor. And what that does is that it gives information that the auditor will use in auditing, planning of the audit. And then if that now is not given, the permission is not given, what should he do? If the permission is not given, he should reject the appointment, So all those points also fall under this one. So if you ever in an exam sitting and you fail to remember these ones, the guidelines that we said under changing of professional appointment, just list them there, and then you'll have the full points where we have said the first one is speak to the predecessor auditor. If that does not, if the permission is not given, you reject. That is another point here. And then after which the predecessor auditor is to seek permission because of what we call the confidentiality principle, which we said this is not divulging the information of that individual. So again, on this one, we're saying this is the audit engagements. You have to, first of all, establish the preconditions of an audit exist, and then you confirm the understanding between the auditors and the management. Now, the agreement on the audit engagement or the terms of the audit engagement can be described or can be influenced by these factors that you're saying. So the procedures to perform before accepting an engagement are necessarily, one, ensure that the auditor is not disqualified on any legal grounds, after which you consider the audit firm if it has sufficient resources in terms of the financial resources also, and if it has the necessary staff to undertake the work. Also, the availability of the staff. Also consider the availability of the staff, availability of the staff that you're saying. So those are some of the procedures you can undertake in conducting or before accepting of an engagement. Factors to consider, the procedures to run before accepting an engagement. So in other words, that is the factors to consider before accepting an engagement. And then the other one will be the factors to consider upon accepting an engagement. Any questions up to that point? So the factors to consider after appointment, or the procedures to consider after appointment. Procedures to perform after appointment, So these are now what you should have in mind after you have accepted the engagement. So one, we said that the auditor is appointed by who? Who appoints the auditor? Huh? The shareholders. So one, you ensure your validity, the validity of you being appointed as an auditor by reviewing the shareholders' resolution. So that is one. So you're saying ensure that your appointment is valid, by reviewing the shareholders' resolution. So this is because the shareholders are the ones who appoint an auditor during an AGM, and then also ensure the removal of the predecessor auditor. Ensure the removal of the predecessor auditor is valid also. Predecessor auditor is valid, so that you do not audit a company and you're not the rightful auditor of that company. Predecessor auditor is valid by reviewing the shareholders' resolution. The shareholders' resolution. And then also to ensure the preconditions of an audit exist. Ensure the preconditions of an audit exist, of which you have highlighted them in this case, ensuring the preconditions of an audit exist. So that is what you're saying. So when you're answering such questions, these are some of the points that you know. So all these preconditions of an audit are the ones that you're saying in this case. So the factors to consider, or procedures to consider upon appointment, this one also will be to validate that actually, one, the management has agreed to, knowing their responsibility is to prepare the financial statements, also to formulate the internal control systems, and that they will provide the unrestricted access to persons in the company. So for instance, you can look at November 2018, question 3A. November 2018, question 3A. November 2018, question 3A. You're being asked, discuss the process that an audit firm should undertake to assess whether the preconditions of an audit are present after accepting an audit engagement. So that is what you're saying. So you conduct these processes whereby you counter check if the financial reporting framework is acceptable. So this one is that the financial statements have been prepared with the identified financial reporting framework. Then also the points that we have highlighted there. So that question contained at least 4 marks. 4 marks. So that is on the preconditions of an audit. So we are saying that one of the things you have to put in mind is that when you're accepting an engagement, you have to speak to the predecessor auditor. So what do you think are some of the issues you would ask a predecessor auditor? One is on the integrity of the management. You'll want to know, as the management, are they individuals of integrity? So we're saying, so the importance of communicating with the predecessor auditor communicating with a predecessor auditor is such that one, it helps in understanding the management's integrity. So one, to evaluate the integrity of management, like we said, to evaluate the integrity of management, whereby, so this predecessor auditor has worked with them for years on end. So they know what kind of individuals the management are. And then also it enables the auditor, the incumbent or the successor auditor, to obtain what we call, to obtain working papers, to help in, which will help in audit planning, So to explain what working papers mean, so these are documentations that the auditor has been keeping a record of how to conduct an audit of the client. So if this is the predecessor auditor, the procedures that he undertakes to audit the client will be included in these working papers. So you document every aspect of the audit. And then, so this will guide the successor auditor to plan on the audit. That is what we call to obtain these working papers. So this is like a record of how the outgoing auditor, the predecessor auditor, was auditing that client. And then also to obtain a background knowledge of the client, of the client. So this background knowledge means, one, the legal framework or the legal requirements guiding this company in its operations, also the economic factors that the company works in. All that information will be included in the background knowledge, whereby the products that the company offers, what kind of business the company is all about. So this predecessor auditor, he has been auditing this company for some time. So he knows the kind of experience that or the kind of products the client offers. And then also, so to obtain a background knowledge, and then also it is a form of professional courtesy, also as a matter of professional courtesy. What does professional courtesy mean? This is a sign of respect for the people in the same kind of profession. That this now, in communicating with the predecessor auditor, you accord that individual with the professional courtesy that he deserves, professional courtesy. And then also, it is a professional requirement, and to understand, also to know or to understand reasons why, the reasons for change of auditors. To understand the reason for change of auditors by the client. If they had issues with the accounting policies, or whereby the auditor had to go for certain aspects of the business, then that will be highlighted with communication with the previous auditor. So one thing you need to understand is that you have to communicate with the predecessor auditor, because if you don't do so, you'll spend so much time planning an audit that you do not have any prior information concerning that. So it is a legal or it's a professional requirement to speak to the previous auditor.